All right, so now we have trading session in the Forex market. All right, we have trading sessions. Now, these trading sessions are when the market opens and closes for different regions, okay? When market opens and closes for different regions. So we have four different sessions. We have the Sydney session. We have the Sydney session, which opens 5 p.m. EST and closes 2 a.m. EST. Now, EST time is plus 7 hours during the daylight savings. Then of the daylight savings is plus 6 hours. Let me check something now. Let's know which one we are. EST. I'm trying to check to know. Yeah, EST is actually Eastern Standard Time. Eastern Standard Time. Okay? It's in New York time. Okay? So this 5 p.m. Nigeria, this 5 p.m. EST is actually 10 a.m. Nigeria time. So presently, we are 6 hours ahead of New York. Okay? So we are 6 hours ahead of New York presently. Okay, so the market opens 10 p.m. Nigerian time on Sunday. So like yesterday now, the market opened 10 p.m. Okay, that's when the Forex market opened, because the Forex market trades Mondays to Fridays and it opens 10 p.m. Sunday and close 10 p.m. That's 9:59 on Fridays. That's the Forex market. But that's both the commodities, stocks, and the rest, they trade that way. But the crypto and synthetic, they trade 24/7. So, but the Forex market is the primary market, all right? These other markets are secondary, okay? So that's the Sydney. Then we have the Tokyo. Now, the Sydney is actually where NZD is traded, right? Let me check something. Okay, so JPY is the Tokyo. Then AUD and NZD are the Sydney. Okay. Okay, so the Sydney has the AUD and NZD. That's the AUD and NZD market. They are the Sydney session. Then the Tokyo session has the JPY, the Japanese yen. Okay. Opens 7 p.m. EST to 4 a.m. EST. So when the market opens on Sunday by 10 p.m., by 12 p.m., which is 12 midnight, Tokyo session opens. So these two markets overlap till the morning hours around 7 a.m., okay, when they will be going off. Then by 8 a.m. the next morning, at our time, the London session open, which is 3 a.m. EST to 12 p.m. EST. So 8 a.m. Nigeria time to 5 p.m. Nigeria time. So we have the New York session. New York session open 8 a.m. EST and closes 5 p.m. EST. So this opens 1 p.m. Nigeria time and closes what time? I think 10 p.m. Nigeria time. Okay. So now let's look at overlapping. Now, overlapping is actually when two sessions are running concurrently. Now, when I mentioned Sydney and Tokyo, Sydney will open by 10, while Tokyo will open by 12. So between 12 and 5 a.m. in the morning, there's overlapping. All right, there's overlapping. So the two sessions are trading. Now, liquidity will be a bit high, all right, but you'll get the best liquidity during the London and the New York session. Okay, so overlapping session. So Sydney, Tokyo, which is the 7 p.m. to 2 a.m. EST. Then London, New York. So these are the two overlapping. So London, New York, and London, they overlap. Okay, that's between 1 p.m. Nigeria time to 5 p.m. Nigeria time. That is when London and New York overlap. Your voice during the Forex market opening time was not clear. Please explain. Forex market opening time. Okay, I'm still on it. I believe I must have repeated what you're talking about. Now, say high liquidity is the best time to trade. What is high liquidity? Liquidity is when there is money in the market, when there are a lot of participants. So some people are buying, some are selling. The more the liquidity, the more the money that has come into the market, the faster the market moves, all right? And liquidity is actually more during the New York and the London session. Liquidity in the Sydney and Tokyo session, which we call the Asian session, is really quite low. But that does not mean that trading does not take place. Trading takes place, but the movement is pretty low compared to during the New York and the London session. Liquidity is the amount of participants in the markets. Then spread. Spread is the difference between two currencies, either buying or selling. Now, there's what we call spread in the market. Now, spread is the difference, okay? So now, let's take, for instance, you go to Aboki to sell your dollar. Aboki will tell you that we are buying for 1,700. My network was misbehaving. I'm sorry for that break in transmission. So sorry. Let me share my screen again. Let me share my screen, please.
Recording in progress.
All right, so I just connected my mobile device as well so that if one is not doing well, I believe the other will be able to help. Okay, so let me share my screen, and I believe my screen needs to be. Okay, so I was actually saying something about spread when the network took us off. So our spread is actually the difference between the buying and the selling price. Okay, and so this is where the broker make their money. All right, so what the broker make during the buying and the selling is the spread. And I gave an example of when you take like dollar to go and sell to Aboki, Aboki will tell you that they are buying for 1,720. And you want to buy from them, which is selling, they sell at 1,750. So you can see that the difference between the 1,720 and 1,750 is 30 naira. That 30 naira is the spread. And that 30 naira is how the broker make their money. So the person who you have sold your dollar for, the 30 naira is his gain, and that person is the broker. So the Aboki that we use to sell and buy our dollar, they actually broker at a local level. All right. So then volume is the size of traded activity in a certain pair. All right. Volume now, volume is the size, is as simple as then volatility is when market condition changes rapidly. High or low volatility, you see big and small candles. So volatility, you know, when there is liquidity, there is bound to be strong volatility. That's, you know, when you in the market, we're going to get to when we show you the chart, you see big candles, boom, very long candle, and sometimes you see very tiny candles. That's when liquidity is low and the volatility is quite low because there's no participation, no much participation in the market. But when there is a lot of liquidity, volatility will be high because there is demand, both buy and sell and all of that. So it's quite, but the best time to trade is when you have liquidity in the market, okay? When you have liquidity is the best time to trade. So the session said, okay, start trading day of the Forex market, smallest and calmest of the mega market, which is the AUSD, NZD pairs, Australia market. I already mentioned it earlier. Then the Tokyo session, second session, third largest Forex market, which JPY pairs, low liquidity and volume, high spread. Now, the spread are usually high during the Asian session generally, okay? So we have the London session, third session, GBP, Euro, and CHF. All right, that's the center of trading. Say 34% of Forex markets, most active trading session, high liquidity, high volume, low spread, major news for the week happened during the London session. Then New York session, this is the New York session here. New York session marks the end of the Forex day. 85% trades involved USD. The big moves take place during the New York session. Major news releases, USD and Canadian dollar pairs are the major pairs of that season. Then volatility dies down after 12 p.m. EST. So that's after around 5 in the evening, volatility begins to calm down. So best time to trade is the major overlap, which is the London, New York overlap, which is 8 a.m. EST to 12 p.m. EST, which is 1 p.m. to 5 p.m. Nigeria time, just like I said earlier. Then the London, Tokyo, 3 p.m. EST and 4 a.m. EST, which is 8 a.m. to 9 a.m. Nigeria time. Worst time to trade. There's also a worst time to trade. Usually, the worst time to trade is during the Asia session. Okay? So during New York session, after 1 p.m. Eastern Standard Time, when overlap stop, during the start of Sydney session through the beginning of Tokyo session, non-overlap period, major holidays, e.g. the US major holidays and Europe. Now, there are holidays in the UK, in the Europe, the Eurozone, the UK and US. They are the one leading the market. So when they are on holiday, the markets, especially the US and UK, when they are on holidays, all right, just like we have Independence Day, we have all those different holidays. When they are on holidays, the markets tend to slow, all right, because they are not participating in the market. They are bank holidays, they are different holidays. And as soon as you understand that there is holiday, you are supposed to stay away from the market. But a lot of people still trade during holidays, but frankly, the liquidity is low. So, same Forex market time converter. Okay, all these are some resources you may need. forex.timezoneconverter.com. Then buy and sell. Say buy equal to or less than when currency is to rise. Sell when currency is going down. strong up downtrend can cause markets to be stuck in overbought or oversold for an extended period of time. Note, don't fight the trend, follow it now. There's what we call trend in this market. Trend is the continuous direction of a market, okay? Now, the market might be doing up and down, but yet is going in a particular direction. So if you go to the lower time frame, you see that the market is dwindling within maybe just 2-3 hours, is moving between an area range, and but gradually in the overall is going up, or in the overall movement is coming down. Okay, so that is the trend. All right, we'll get through to all of that in the course of the journey. So the trend is your friend. The best direction to follow in any market is to follow the overall trend. You may be in a drawdown for a period of time, but surely if you have equity to withstand your drawdown, you'll come back into profit. All right, so I think we'll end it here today. Then we'll ask some, we may need to dwell on more questions now. So then tomorrow we start from candlesticks analysis. All right, because candlesticks is actually something very critical. I don't want us to just rush it anyhow. We need to start with it tomorrow for it to be well broken down. We'll go into the chart and show you how it looks like on the chart. And we'll be talking about the open, high, low, and close, so that you have a better understanding on the chart. So right now, we have come to the end of today's class. So what will happen next now is to open the room for questions. Then while I stop the recording, then tomorrow we start from